Hello everyone, this is Jennifer. So our next chapter is reconciliation of cost and financial accounts. So basically there are two methods of keeping cost accounts by double entry system. The first method is the integrated method, second one is the non-integrated method. So integrated method is also known as integral accounts, or non-integrated method is also known as non-integral accounts. So under integral accounts, basically the cost and financial accounts are integrated into one set of books and only one common profit and loss account is prepared. In such a case, the need for reconciliation does not arise because it's just one book. In non-integrated accounting, the cost accounts and the financial accounts are separately maintained in two different set of books. Hence, two profit and loss account is prepared, that is your financial profit and loss account and your cost profit and loss account. So, which is one for your costing books and the other one for your financial books. The profit or loss shown by costing books sometimes may not be equal to the financial books. At that time, it is very necessary for the organization to reconcile both the books. So this is when the need for reconciliation arises, and by this we get to know only the non-integral accounts need the reconciliation of cost and financial accounts. The need for recognition. Why basically reconciliation needs to be done between your cost accounts and your financial accounts? The first one, it basically reveals a difference in profit and loss account between the cost and financial account. So basically, when there is a difference in profit and loss shown between your cost and financial account, they need to be reconciled in order to show why the difference is being identified. Second is helps in checking the arithmetical accuracy and order, and also it basically tells us whether the arithmetical accuracy in cost accounts is correct or not, whether the company can rely on the cost accounts accuracy or not. Hence it needs to be increased, hence we need to reconcile the cost and financial accounts. Moving on to the next topic, which is reasons for disagreement in profit or loss account. So basically there are 5 reasons why there is a difference which is shown in your profit and loss account between your financial accounts and cost account. The first reason is items shown only in financial accounts. So there are a number of items which appear only in your financial accounts and not in your cost accounts. So while reconciling, any items under this category which are shown only in your financial account needs to be considered. So the items which are shown only in your financial account basically classified into 3 categories. The first one is your purely financial charges, which is purely your financial expenses like your loss on sale of capital asset, loss on sale of investment, interest on bank loans, etc. Next is your purely financial incomes. So the examples could be the incomes which are financial in nature, like your rent receivable, dividend interest received, profits arising from your sale of capital assets, etc., or investment. Third is your appropriations of profits. The items appear only in your profit and loss appropriation accounts, like your dividend paid, transfer to reserves, etc. So these are shown only in your financial accounts but are not shown in your cost accounts. So hence these become one of the reasons why you need to reconcile between your financial account and cost account. The second one is items shown only in cost account. So there are certain items which are only included in cost account and not in your financial accounts. Example could be depreciation on fully depreciated assets, or interest on capital employed which are not actually paid, or a charge in lieu of rent within premises are owned but no rent is payable. The third one reason is under absorption or over absorption of overheads. Overheads are your indirect expenses. So in your cost account, if you see how overheads are being identified or treated, are in cost accounts overheads are recovered at a predetermined rate, whereas in financial accounts these are recorded at actual cost. This may give a rise to difference between the overheads absorbed in cost and actual overhead wherein the cost is incurred. So such difference may be written off in your costing profit and loss account. If these are not written off in your costing profit and loss account. It shows a difference between the actual amount shown in your financial accounts and the actual amount recovered in your cost accounts. Hence, these need to be reconciled whenever there is a under or over absorption of overheads. The fourth point is different bases of stock valuation. So if you see in your cost accounting, the stock are valued at LIFO, FIFO method or weighted average method, whereas in your financial account they are valued at principal of cost or market price, whichever is lesser. So at that time it shows a difference between the figures shown up. So hence the different bases of stock valuation also acts as a reason for reconciling both your accounts. The last one is your different charges for depreciation. The depreciation is not charged in the same way in your cost accounts and financial accounts. If you see in your cost accounts, the depreciation is charged based on machine hour rate or production unit method, etc. Whereas in your financial account, we use a straight line method or diminishing balancing method. So basically it shows a difference in your depreciation amount which needs to be reconciled. So the last one is methods of reconciliation. Basically there are two methods of reconciling your cost and financial accounts. First one is your reconciliation statement. The second one is your memorandum reconciliation statement. So we'll look into the practical problems while we're dealing with our reconciliation statements. Thank you everyone.